Alright, hey guys, Scott here again with a brand new video, and in this one, we're going to dive into the charts a little bit here, and I'll be giving you my general assessment on this current bear market of 2022. So again, based on what I'm personally seeing in the charts here, and based on some relevant economic data, is this bear market going to perhaps end sometime soon? Are we going to see a sustained recovery basically? Or is it more likely that we're going to continue moving in a downward direction? And for those of you who have been following my channel for quite some time, I'm sure you probably already know my opinion on this matter, but still, I will save my, final judgment or assessment towards the end of the video. Now, briefly though, before we dive in here, if you guys want to learn how you can automate your exact option trading strategy and perform detailed trading research with things like backtesting software and trading simulations, then make sure you watch until the end of the video. And then also, for anyone who would like to join a very exclusive online community where you can learn how to trade options and my overall custom approach to the markets, then you can now join my options trading Discord as well. So definitely check out the video description below to learn a lot more about that. And then lastly here, for anybody who is also brand new to the channel, again, my name is Scott, and you can also find me on SKILLSHARE as well, where you can take my very detailed classes on options trading or stock market investing. And you will also find some links to a few of my introductory courses in the video description as well. So be sure to check them out, and when you join Skillshare using those links, you'll get a full 1 month free trial. Alright guys, so now we'll dive in here, and first up we'll take a look at the SPY charts, which is the major ETF that tracks the S&P 500. So we'll go ahead and zoom in here a little bit. And so as you can see here, in the past few months, the market has been trying to stage a pretty broad rally, especially during the months of July and August. Right, so especially during this time here, the market was just screaming higher pretty much every day in a row. And of course, most people thought the bear market was finally over. But of course, the main question I was asking all during this time was, is this actually a legitimate recovery, perhaps back to all-time highs? Or is this simply another dead cat bounce or a bear market rally, just like we saw back over here during mid-March of 2022? Right, so you can see the exact same thing unfolding back during this time. The market was screaming higher. A lot of people on financial media and across the internet thought, hey, this bear market is over, but oops, not so fast. And so right now it does seem like the exact same kind of pattern is playing out once again, but the market currently is at a very pivotal point. And so specifically regarding what I have shown on my charts here, we have this ascending trend line, which has been in place ever since the bottom of this bear market so far back in mid-June. And for the most part, it has been respected very, very nicely. And then also with this solid white line, this is a very, very important support level, which as you can see here, for 1, 2, 3, almost 4 days, the market has refused to go below. And even though also SPY has broken this ascending trend line a little bit as well, but today it's definitely rebounded back above that trend line. So the way I read these charts is, for the time being, the market definitely has found support at around $390 per share, which is pretty much to be expected given how quickly we have gone down in price over the past few weeks. Right, so even in extreme bull markets or bear markets, the market is not going to travel to its destination in one straight line. There's always a lot of chop along the way. So therefore, at some point with this huge down move that happened very quickly, at some point you are going to see a nice bounce. Right, so here would be a great example of that. The market took a tumble, and then we saw a small dead cat bounce, and then another massive tumble. So therefore, at the moment, it does seem like we are seeing the beginning of another small little bounce here, and I could see SPY get as high as perhaps $400 per share, where in that case, it's likely going to run into some major overhead resistance. Right, so as you can see here, and also here with this candle, this price level at around $400 per share has proven to be a very significant barrier. But ultimately here, even if we do see a significant bounce up to that point, in my opinion, I don't think that bounce is going to last. And in fact, it's probably going to lead to another very large leg down lower. Right? Because bottom line, what's happening now and what happened back over here in particular when the market totally fell apart and fell down to its recent lows, the general macroeconomic situation between these 2 points in time has not changed. Right, so specifically back during this time, during early to mid-June, this was when the Fed had their FOMC meeting where they decided to raise rates by 75 basis points, which they have not done in many, many years. And they had every reason to do that because if we come over here now real quick, this chart is showing you the CPI number in the US over the past 10 years or so. And as of July 2022, which you can see here, this is basically the latest data that this chart is showing, inflation in the US is still wildly out of control. And so, of course, the best way to combat inflation, to bring it back down to a normal level, is to increase interest rates. Now, we still have yet to see what the August CPI number looks like, and that'll come out, I believe, next week. But if inflation still is very much out of control at that point, then in my opinion, that's going to add a lot more fuel to the fire here. Right? Because one of the main reasons why we saw this huge rally in the past couple months here is because there's a lot of talk that the Federal Reserve is going to pivot or basically become less aggressive in raising rates and combating inflation. And that assumption was largely due to the fact that the CPI number in July had come down a little bit. So naturally, perhaps most people in the market thought that we were out of the woods, so to speak, with inflation, and that we are well on our way to getting prices back down to a normal level. But once again here, not so fast, because on this day, this was the Jackson Hole conference where Jerome Powell, who is the chairman of the Federal Reserve, basically said that no, the Federal Reserve is not going to pivot. We're not going to become less aggressive with inflation. If anything, we're going to become more aggressive. And so bottom line, just like back during this time, the market was pretty much slapped in the face again with reality. Right? So again, back during mid-June, inflation was still out of control and the Federal Reserve had no choice but to be very aggressive and raise rates. And so far, it seems the exact same situation or story is playing out once again. Inflation is still out of control in the US, and the Federal Reserve is going to continue being aggressive in trying to combat inflation by raising rates more and more. So ultimately here, even though for the time being the market has found support at around this level, again, as to be expected given how much technical support there is based on these trend lines and the support level, etc., etc. But ultimately, like I said, I do think the support level is going to break and we're going to continue pushing down to lower and lower lows. And in fact, if we go to QQQ real quick, which is an ETF that tracks the NASDAQ index, and we'll go ahead and zoom in here a bit as well. The Qs here have already broken both their trend line and their support level. And since tech stocks in general have been leading to the downside in this bear market, I'm definitely not surprised that this is happening. And so in fact, with the Qs already breaking major support levels and technical barriers, I think it's only a matter of time before the S&P 500 does so as well. And then on top of all that, one more thing to show you here, let's take a look at TLT, which is an ETF that tracks the 20-year Treasury bonds. And once again, we'll go ahead and zoom in here as well. And so the way bond pricing works specifically for TLT is as TLT goes higher in price, interest rates go lower. And then conversely, as TLT decreases in price, interest rates go higher. And so much of this rally here in TLT coincided with the rally that we saw across the broader equity markets, right? Because again, a lot of people thought that there was going to be a Fed pivot, so to speak, and that the Fed was going to be less aggressive in raising rates and perhaps even reducing rates at some point very soon. But ultimately, the facts and reality matter the most in the end. And both the facts and reality say that inflation is still way out of control and we have no choice but to increase interest rates by a lot more. So therefore, in the past few weeks here, TLT has been selling off like crazy. And now, once again here, it has regained the lows that it made back in June, which was the previous time where the market totally fell apart and made those lows of this bear market that we've seen thus far. But obviously, as you can see right here, TLT is showing signs that it's likely going to break the support level and make even lower lows, which again means interest rates are going to climb even higher. And if we take a step back here and go to a longer term time frame, let's look at a max weekly chart. And so as you can see here, this is the current price of TLT, and obviously there is a lot more potential downside to come if inflation still becomes very difficult to control and bring back down to normal levels. So bottom line, if we go back to a daily chart real quick, bottom line is if the support level here on TLT does actually break and therefore flips to resistance, and I do think it will happen, it's only a matter of time. And then also, if we go back to SPY real quick, and then if also the support levels and trend line here break on SPY, I think you're going to see a lot more downside with this bear market. Right, basically, if those two things happen, I think retesting the lows here from early June or mid-June is pretty much a guaranteed thing to happen. But ultimately, if inflation still proves to be very stubborn with future CPI reports, then in that case, I think you're going to see the market here make even lower lows. And so with that being said here, that's going to do it for this video. But of course, one last thing, as I mentioned, if you guys want to learn how you can automate your specific option trading strategy and perform detailed research with things like backtesting software and simulations, then join Option Alpha today for a free 30-day trial. And so this powerful and very easy to use software allows you to rapidly configure trading bots that will execute your exact trading strategy automatically. Right? So it's the perfect way to eliminate human error and emotion from your trading while also ensuring that your portfolio is always being actively monitored and managed while the market is open. And you can also use Option Alpha's powerful backtesting software to improve your strategy by continuously testing and refining your approach over decades of stock market data. And finally, the Option Alpha platform offers a huge online community where you can engage in discussion with other traders, get answers to all of your questions, and find inspiration for new trades and strategies. And so if that sounds good to you, then again, use my link in the video description below to sign up and begin your 30-day free trial. And also don't forget to check out and join my options trading Discord as well as my Skillshare courses. Links also in the video description. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week and you don't want to miss out. So thanks again for watching, and I'll see you next time.